Ladies and gentlemen, good day and welcome to ITD Cementation Q4 FY2024 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you, and over to you, sir.
Thank you, Yusuf. Good afternoon. On behalf of ICICI Securities, I welcome you all to the Q4 FY24 earnings call of ITD Cementation India Limited. Today, we are pleased to host the management of ITD, which is represented by Mr. Jayanta Basu, Managing Director, and Mr. Prasad Patwardhan, CFO of the company. Without much delay, I'll hand over the call to the management for their opening remarks, which will be followed by Q&A. Thank you, and over to you, sir.
Thank you. Good morning, good afternoon, everyone, and thank you for joining us on this Q4 FY24 results phone call. Before I begin, let me mention that there could be certain statements from the management today during the call which will be forward-looking, but would be subject to several risks and uncertainties. So we would like to bring this to your attention before we move ahead. We have declared our results yesterday, and I'm sure everyone has got a chance to look at the numbers. We have had a very satisfying performance during the quarter, and a stellar performance has been reported for the year ending FY24. For the quarter ending March 24, our total operating income was 2,258 crores as against 1,631 crores in Q4 of the previous year, representing a growth of about 38%. EBITDA of 242 crores as against 147 crores, growth of 64%. PAT of 90 crores as against 38 crores a year back, which represents a growth of about 138%. For the full year, we have reported a top line of 7,700 crores, which represents a growth of 52% on a year-on-year basis. Our EBITDA has also grown by about 75% during the year, and PAT margin has grown by 120% from 125 crores to 274 crores. Our balance sheet continues to be extremely healthy, and the net debt to equity ratio is under 0.2 times. During the year, we have secured new orders for about 6,900 crores, and our order book as of March 24 is a little under 20,000 crores. This is as far as our financial performance is concerned. I will now hand over to Mr. Basu for his initial comments, and then we'll take your questions.
Thank you, Prasad, and good afternoon to all for joining this call. And I'm very happy to share the numbers, what you have just heard from Prasad. The substantial growth in top line and bottom line as well during this last year. And we have grown from 5,000 crores to close to 8,000 crores in top line. And in PAT level also, it is almost 3.6% of the revenue, which is, I think, the best PAT we have in recent past. I'm sure that this momentum will continue further because we have several jobs opportunity. Some of them we have already tendered. Some of the tender, work is going on, and some we are yet to receive the tenders, but we have identified. And those are mostly in the segment where we do good, like marine, underground metro, bridge. So the kind of job where really normally perform better. Going forward, our focus is to have some more jobs from the overseas market because as we find that there are new developments happening in Middle East, West Africa, a lot of investment from Indian government, but they are also investing money, so there are a lot of new projects are coming where we like to participate. So our endeavor and efforts are there to get some new jobs from the overseas market as well. Now, this year we have seen the revenue growth and margin growth. But there are few jobs which have secured towards the end of the last year, big jobs where we can only, they are still in threshold limit of the margin declaration. So we have taken the revenue, so margin is yet to be declared, so which will definitely add to the bottom line second or third quarter onwards. This is what I have to say in opening statement. Now we'll be happy to answer any questions you may have going forward. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Thank you, sir, and congrats on a very good year. So my first question is regarding, at this juncture, will you be able to provide some kind of a guidance for FY25 in terms of revenue growth, margins, and order inflows?
Revenue growth, as we have been maintaining, it will be 20% plus in terms of revenue. Margin also will be commensurate to that. And order inflow, we are expecting the order what we can see in the horizon, close to 8,000 to 10,000 in between, say 9,000 crore. Our target is to have this year's order inflow.
So around 9,000. And the margin, is there any scope to improve beyond 10% going forward?
It's difficult. You see, construction industry has got their own standard margin and revenue. So 10% plus is, I think, okay. If we can do something better, we'll be happy. We'll try for that. But I think we have to live with this margin, 10%, a little bit more than 10%.
Sure. And so you mentioned in the opening remarks that we will be looking at overseas orders going ahead. So what kind of opportunities are we looking at, and what will be the share of overseas orders out of this 9,000 crores?
We aim to do around 30% of revenue from overseas by another 2 years' time or 3 years' time. Now today, the kind of job which we are pursuing, if we get some of them, I think it will be around 20% plus order overseas business. Yeah.
20% plus from overseas. Okay. And just a final question. And recently, there's a lot of road tenders which were opened in Maharashtra, almost around 90,000 odd crores. So did we participate, and if not, why?
Yes, we had. See, I don't know which one you are mentioning. There are many jobs, particularly coastal road and tunnel job between this National Park, Sanjay Gandhi Park. Mm-hmm. We have not participated because we found that it requires a lot of investment, particularly tunnel job, where the TBM charge is very, tunnel boring machine charge is quite big and requires a lot of investment. And in the stage what we have today, we have to contain our capex within a limit. That is the main reason. And in some cases, probably there is a qualification issue as well. So yes, we have not participated because of this reason.
Okay, I've got a few more questions and get back at you. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Yeah, hi, Jayanta sir. Congratulations on a good quarter.
Thank you. Thank you.
Okay, just wanted to understand from you, you highlighted that you will get about 8 to 10,000 crores of orders in the next year. So this factors in the election-related and delays in the government formation, which may take some time, and also the ordering to pick up. So have you factored these while giving this guidance?
Well, you see, it is not only that we are depending on the government order. Beyond that, most of the time in marine, our customers are mostly private client, like DP World, like Port of Singapore, like AP Moller, and yes, Adani as well, JSW. So all of them have got big marine jobs which we are pursuing. And yes, thereafter some jobs we have submitted or bid, like few metro jobs which are already there, which will definitely after July, August, they will be matured. And few jobs, it doesn't depend on the election. There is overseas job. It has nothing to do with our election result. And around four star jobs we are pursuing, and we are quite hopeful to get at least one or two. And they are big ticket jobs.
So what is the current pipeline? What is the current pipeline in the marine segment? Because that is what is the most profitable segment for you. So if you can highlight what is this pipeline there, and also in terms of the upcoming BOT opportunities, do you think that you would continue to work as contractor towards larger players, especially Adani? You've been doing that Ganga Expressway. So do you think you are open to exploring opportunities on taking subcontracting at least on the NHI road projects for leading contractors or developers?
No, we don't have, at the moment we don't have such plan to the road work from NHI. But if we get one more Ganga Expressway, probably we'll be happy to do such work.
And on the marine side, sir, but not directly from NHI, but say if Adani wins some beauty toll projects or some other developer wins and he's okay, and he takes a support. So are you okay to give support bids to the leading developer where your scope of work will only be limited to EPC for the developer? Are you open to those opportunities?
Yes, definitely. If there is a developer, and basically it depends on the due diligence of the project. Basically, you have to see whether the funds are available and the developer has got money and such kind of thing, and the location. If all these things matches, why not? If you are able to do in Ganga Expressway, you can do anywhere. And in marine, of course, marine is one of the strong area. So as you just mentioned, pipeline here, there are at least 7 jobs in front of my table which we are pursuing now. And all of them are 1,000 crore plus minus. I mean, not minus, plus. If we get at least 2 of them, then that's a good deal for us.
Okay. And this is the last thing on the JV profit. So I just want to understand from you that this year the numbers on the joint profit from joint ventures has declined. So if you can highlight and help us understand that what is the residual value of cash, because I know we are very conservative. So I just want to understand how much of the profits are yet to be realized from underground metro projects. When do you expect it to get commissioned? So, and even from Kolkata Metro, if anything is pending, which where the TBM issue happened, so anything there which can be realized. So carrying value of unrecognized profit from the JV companies. So if you can give some color on that.
Yeah, one thing, for instance, that JV jobs are almost now on the finishing stage, because if you see Calcutta Metro is completed, I think it's completed, leaving few work. Bombay Metro is almost completed, and there is no other JV jobs we are doing. So all are the fag end, and there will be little bit of margin and cash will remain there. I don't have the number exactly yet. I can talk to you later on. But I can say that there is not much substantial contribution, either plus or minus or cash from JV jobs going forward.
Okay, sir. Sure. Only thing is, I was looking at your order inflow guidance, looks to be a little bit on a muted side, because now with the book to bill of, this year maybe if you do, and I think you had earlier guided close to about 9,500 crores of top line for FY2025. So which means that we're just replacing our order book of 9,000 crores, and we are still at closing maybe at about 19,000, 20,000 crores of backlog, which is 2 times book to bill. So if we need to grow from here on into FY26, we need to at least get more than 15,000 plus crores of orders to deliver that kind of a growth. So just wanted your color, a little bit more color and sense from you that how do you see the growth beyond FY25 given kind of muted inflow guidance for FY25?
Yeah, we are thoroughly aware about the situation. and we are working, and there are plenty of opportunities, as because I have told you that we are not contained only in India, we are going overseas, and there is good overseas market as well. We have a plan in place, and future will tell.
Okay. Okay, sir. Sure. Thank you. Those are my questions, and wish you the best.
Thank you. Next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Yes, hi, good afternoon, and thank you for the opportunity. So my first question is on the competition. In the last call, we highlighted that be it underground, metro, be it marine, it seems that more number of players have started participating and bidding for the projects. If you can highlight any change, and also in the context that currently the order inflow seems to be muted across players given elections or whatever. How has the behavior been versus peers in terms of how they are pricing? Are they dropping their margins to go out and get orders, and how are we reacting to that?
Well, I think this is a very constant phenomena in any business. Today, if you are doing good margin in one segment or one particular type of job, tomorrow there will be more crowd, you have to go to new places. That is how business goes, and that is what we do really. We have realized that a few segments like small marine job is no more a profitable segment. So one thing that we have gone to bigger marine jobs or bigger jobs. If you see today our work in hand, we may have 50 jobs in hand, but out of that 8 jobs contribute to 80% of our revenue. So the moment you go for the bigger jobs, we have less players, and fortunately, because of our past, we are able to get qualified as well for the bigger jobs. That is one thing. Second thing is that we are going to overseas market, because last 2 or 3 years we have demonstrated that we can do overseas job, which is a new ball game, and we have established a team, and so our market footprint is now big. And third thing is that we have got few clients. We are delighted because basically they want us to do the job. We are trying to maintain the good relationship with them to get more and more job for them. So these are the strategy, the way we work to get out of this, red ocean to green, blue ocean, whatever it is.
Correct. And sir, regarding what you mentioned that top 8 customers contribute 80% of revenue. I understand that we do few large projects and we are able to concentrate on it much more, but doesn't this then create a much larger risk that if something, and historically something or other goes wrong at some point of time. So if something goes haywire, it completely affects our company as a whole. Just your thoughts on how do we balance between concentration and diversifying across projects?
Yeah, I think the basic has to be right. If you take a big job with poor margin, and if you execute wrong, then you are gone. That is true. So unless that is there, you are out from the zero date. So that has to be first ensured that we are matured enough now to realize which job will we do what, enough due diligence we do, and then execute them well. And if you have less amount of job, less number of jobs, then you can control much better. So it's a bit of balance, and your maturity and experience play in such things.
Correct. And so there was some 40 crores of provision this year. Specific to any project, or this is ECL?
No, it's a general provision. Basically, we have to follow the ECL regime and provide for it accordingly. So it's not related to any specific project. It's a general provision.
Correct. And so last 2 data points. One, what will be a capex plan for FY25, and if you can share what was our order pipeline. Currently, what is our order pipeline?
Capex will be less than last year because last year we had to invest for the tunnel machines and trench cutters, so it was more than 450 crore plus, I think, last year. This year it will be around 250 crores in that range. And order pipelines means, as we have mentioned, that several overseas job we are pursuing. I can see around 25,000 to 30,000 crores jobs different stage, either in tender or be submitted or tender to come the coming 6 months, 7 months time.
Yeah. So, thank you and all the best, sir.
Thank you.
Thank you. Next question is from the line of Vipul Kumar Anupchand Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations for a great set of numbers. So my question is regarding overseas bidding. So will it not that our parent will also be participating in those opportunities? So how will you manage that conflict of interest? So is there any understanding that certain projects you can bid in certain areas? So how it works?
Yeah, that we have sorted out. If you have noticed that 2 to 3 years back, we never have been to overseas, and then we have discussed with our parent. It is not that they have interest, it is they wanted to see our ability to do overseas work. And that we have demonstrated that yes, we can do and we can do well. So that is the first step. And then we discuss, of course, if they have interest, we don't go, or if we show more interest, they go away. So that is the common understanding. So there is no conflict as a whole to go for overseas business with our parent company.
And sir, what is the order intake till date in this current financial year? Can you give that figure, please?
This 24-25?
Yes, sir.
So far, we have not, I don't think we have secured it well.
Sorry, sir?
I mean, in the first quarter, I mean, this is May. In this year, we have not secured any job during the last 2 months.
And so last question is regarding margin. So one of our Bombay-based peers is continuously reporting 14-15% EBITDA margin. We are very strong in marine, which naturally carries high margin. So why there is such a big gap with the peers? So what they are doing right, which we are not doing? Your comments will be welcome, sir.
Yeah, if you see, the gap is coming down. I mean, we are increasing and other way around also correct. So, as I said that it is not only marine job we do, because if we only depend on marine job, it's a big risk. So, we do 30-35% from marine job. Other segments like airport or even road, what we do, we have to compete with the local players. So, you must have seen the increase in revenue margin from last year to this year. We will try to do better to reach more margin. But today's scenario is that we don't have much overseas job. That is one of the reasons we want to go to overseas work, because we believe margin will be better. But in India, whatever job we secure, most of the job we have to secure through competition. And there, if we have a competition, 10% margin, more than that is difficult.
Okay, sir. Thank you and all the best.
Thank you. Thank you.
Thank you. Before we move to the next question, a reminder to the participants: to ask a question, you may press star and 1. Next question is from the line of Nidhi Shah from ICICI Securities. Please proceed.
Hello. I wanted to ask, what is the depreciation policy?
Sorry to interrupt, Ms. Nidhi. There is background noise from your end. Your voice is very low.
Hello, am I audible?
Yes, you are audible now. Please proceed.
Okay. What is the depreciation policy for the TBM?
Sorry, I did not understand your question. Can you please repeat?
What is the depreciation policy for the TBM that we use?
The TBMs are depreciated. The current ones that we have in use are being depreciated over a period of 5 to 6 years.
Okay. All right. Thank you.
Thank you. Next question is from the line of Jitin Rushi from Axis Capital. Please go ahead.
Yeah. Good afternoon, sir. Thank you for taking my question. I just wanted to harp more on the overseas diversification. So, these would be projects which will be funded by the multinational agency or the EXIM, or it would be a project which will be directly from that particular country, which is funded by the country.
Yeah, our main focus is to go where there is a funding by Indian EXIM Bank. So that is, Bangladesh, we have secured a job funded by EXIM Bank, payment being made in India. And there are few jobs where we want to go, not totally depending upon the foreign funding. There we have the associates who we know very well, and the payment will be guaranteed. So that is the first thing we have ensured that payment should come. So there are 2-3 models we are working. One is EXIM Bank, of course. Another models we are working. So yeah, it's like that.
So this payment terms would be like these are like fixed price contract, or you will get some escalation, and how will be the payment terms here?
See, basically in foreign contract, escalation normally you have to cover in your price. That is what we see in foreign contracts. Fixed price terms.
And so payment terms will be what? Like, because usually you get mobilization advance also interest free when you do overseas contracts. So I understand that you will be getting mobilization advance in these contracts. And again, the payment terms should be healthy. Otherwise, it becomes difficult. Working capital again becomes a challenge.
Yeah, we get mobilization advance. Like Bangladesh job we secured, and we have already got 10% mobilization advance. We have got Colombo, we have got 15% mobilization advance. Likewise, in future going forward also will mobilization advance. And in addition to that, there is some preliminary items, which is almost like a mobilization item. Against that, you can deal initial few months to get the payment early.
And sir, which segment you are targeting? Only marine, or it could be like non-marine, especially like something like micro or marine buildings?
It is mostly marine, and there is another 2 jobs, which is bridge and tunnel. I mean, tunnel also is involved. TBM with TBM.
This Bangladesh project, so you are doing your portion, which is in the river portion, right? For that Bangladesh transmission company, right, sir?
Yes.
So your order book would be how big, and when are you targeting to complete the project, sir?
Our order value will be 1,700 crores in terms of Indian
rupees.
Yeah.
This is outstanding order book.
Yeah.
And your completion timeline would be December 25?
Completion time will be December 25 or maybe 26, early 26.
Early 26. Okay. And so this is your share, not your JV partner, right?
No, this is our share. I mean, 1,700, I think it will have more side more. It is around 1,200, 1,300 in that range.
That is your share. That's all my chat. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Sriram R, an investor. Please go ahead.
Thank you for the opportunity. Pardon me if I'm asking the same question. I joined a little late. Can you share the order pipeline for domestic marine orders? And also, what is the proportion of overseas orders in your current order book?
Current order book, we have got around 9 to 10% from the overseas. That is current order book. And in pipeline, domestic and overseas, almost 50% in marine.
Sorry, sir, come again. Domestic?
For the new job, what we are pursuing, in marine, at least 50% from the overseas and 50% from the domestic.
And how is the pipeline looking, sir?
In terms of the number, we are asking?
Yeah. I mean, I'm just asking whether we'll maintain the same share of 30% for marine going forward.
Yeah, I mean, that is the aim, to have 30% revenue from the from the overseas market. So today, it is mostly marine we are working, if it is overseas. And say around 8 to 9,000 crores of business in marine we can see from overseas in this year. I mean, opportunity. I mean, how much we get, that is different. Yeah.
And sir, the same for domestic? What will be the opportunity?
Yeah, domestic also same kind. But, domestic some jobs are going a little slow, and election also is a factor. The timeline was, I cannot say anything, but the opportunities are there. That is, projects are there.
Okay, sir. Thank you so much, sir. All the best.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Next question is from the line of Mehul Mehta from Nuvama PCG. Please go ahead.
Good afternoon, team. Thanks for the opportunity. Am I audible?
Yes, Mehul, please go ahead.
Congrats on great set of numbers, especially on working capital, core working capital cycle. If we look at, it's virtually flat, on 51% revenue growth. So how should we see it going forward? Is there something one-off during the year, or we should see this sustainable?
No, we have been reporting, our working capital has been in similar range, throughout the year. So I think you can work with the similar numbers. There may be some elongation of the working capital cycle going forward, which is normal for our business, but it should not change significantly.
If I can further enter into, is that when I'm looking at debtors, inventories, and creditors, if I look at a net of that, it's flat. Maybe whatever non-billable revenue contract and all that I'm not looking at. I'm looking at debtors plus inventory less creditors. It is virtually flat. So that is very significant achievement for me. So how do you see it? This should be is there something one-off, or you should because 50% is revenue growth, whereas this net working capital cycle is flat. So how should we see it going forward? That's what is my question.
No, in fact, on most of our projects, we are getting payments on time. As soon as we bill, as per the contractual terms, we are getting our payments. So, we don't expect any significant change in the working capital cycle going forward.
But over in FY23, in FY24, definitely there is it's very, an efficient working capital. There is improvement. So what I'm looking at is that FY24 should be continuing, and that's sustainable, there is nothing one-off kind of. Sorry to ask again.
Nothing exceptional or nothing that we are expecting this similar cycle to be sustained in the next year. It may vary by a few days here and there, but more or less it should be sustainable.
Sure. So one more question is in terms of if I look at order inflows, say in FY23 there were about 8,800 crores. This year it is about 7,000 crores near. So and an average if we look at it's about 7,000 to 9,000 and so maybe about 7,500 crores kind of average. So going forward, should we look at once stable government is in place, should we, sir has explained about it, but still, can we look at, substantial growth on that, as compared to average 7,500 crores for, last 2 years average? So should we look at, how can we look at it?
Yeah, basically depends upon the size of the job, what you are bidding for, Suddenly if we get a job of 4,000 crores, and then another job of 4,000 crores, the whole thing changes. It's a matter of getting 2 big jobs. So we are quite hopeful that we'll get some big ticket jobs and we'll be able to achieve the order inflow what we have targeted.
Yeah. So what I am questioning is once stable government, because of late there has been significant orders which has been received by kind of HG Infra and PNC Infra and all. So it is coming up. So are we seeing in our segment also marine or whatever segments we are very focused. So are we seeing with stable government in place are we seeing that kind of growth your outlook?
There are a few big jobs from the government which will be activated after the election results are there, like Vadhavan Port and then few more other jobs. And in private investment from Adani and from the DP World and from AP Molar, those many jobs, domestic, there are a few jobs. So altogether, you see, Vadhavan Port is 25,000 crore job. I mean, if you are capable, if we wish, we can take a chunk of them. It is a breakwater, it is a jetty, it is a bridge, many things which is a cup of our tea. So likewise, I say that if we get 2-3 jobs like that, the things will totally, the water book scenario will totally change. And beyond that, we are going to overseas also, trying our best.
Sure. Yeah. Thank you so much and all the best.
Thank you.
Thank you. Next follow-up question is from the line of Parikshit Kandpal from HDFC Securities. Please proceed.
Gentle sir, just wanted one clarification. If I see over the last 4-5 years, your gross margin has been coming down, and whatever the gains in your EBITDA margin, they're largely coming because of high volumes and savings. Because of that, lower employee expenses, a percentage of sales, and even other expenses reducing. So just wanted to understand why is gross margin declining, given that marine has gone up in the mix. If you can give some color in that.
I think margin is better than last year. Can you just specifically tell?
The gross profit margins. I'm talking about revenue less material cost. So that is a gross profit. So your EBITDA margins have increased, but in the mix, your gross profit margins have declined over the last few years.
Parikshit, I think you need to look at the material cost and the subcontract cost together. It depends on our execution strategy and methodology. In some projects, the subcontract element may be higher and the material cost may be lower. So I don't think it's right to only look at the gross margin considering the material cost. Overall, as Mr. Basu said, our margins have only improved, and that is what really matters.
I agree, Prasad, but your other expenses also reduced as a percentage of sales, but I'll take this offline. My second question is on your this last 4-5 quarters, we've been pretty stable in terms of no major escalation or cost overruns. So just want to understand, are all these tricky projects where we were running continuously on cost, they are largely behind, especially the Bangalore elevator, I think it got completed. So anything pending there? And any other project which may create some issue for us in the coming quarters, or now the worst is behind and we'll see continuity at least in high single digit or early double digit margins?
Yeah, as far as the projects are concerned, we had Bangalore Metro, as all of you know, that is in the last 2 quarters before it has been behind us. So what is remaining now only is the claim and arbitration. If we get something from there, that will be only pluses. And beyond Bangalore Metro, there is no other job where we have got any such issues. So yes, we are in a comfortable situation as far as legacy job is concerned.
Okay, sir. Thank you. Those are my questions.
Okay, thank you. Good.
Thank you. Next follow-up question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Am I audible?
Yes, you are. Please go ahead.
I want to ask that the employee expenses are proportionately much lower, given that we've had a 51% increase in revenue and we're projecting another 20% increase next year. Would there be any further hiring that would sort of make the employee expenses more proportionate to last year?
Yeah, there will be definitely, for overseas business, there will be some increase in the employee, and that is a normal cycle of business. Not much, but if we have to do more revenue, there has to be more people as well. Not to the proportionate to the increase of revenue, but some proportionately increase.
Okay. So currently, would we see that the employee expense proportional to the revenue would increase by how much? Do you have any rough count on that?
Difficult to tell, but delta increase in employee cost will be less compared to the increase in the revenue. So in that way, proportionally, if you see, there will be marginal increase or even flat in terms of percentage.
Okay. All right. And I also wanted to know what do you think are the 2 or 3 key drivers for growth of revenue this year?
I couldn't get you, ma'am. If you can repeat, please.
What are the 2 or 3 key growth drivers of revenue for this year?
Well, first of all, we are focusing on big jobs. When I say big job, 1,000, 2,000, 3,000 in that range. And we execute them. Each job will give you much more revenue than what you do normally with the small jobs. So that is one area that we are focusing on, the big jobs. And second is that execution speed. Nowadays, nobody allows 5 years, 6 years time, particularly in marine and all. So we are trying to improve our execution cycle so that we can get more turnover per month by mechanizing the things and executing fast. These are the 2 drives for the big revenue.
All right. Last question, if you don't mind. What is the order opportunity in underground metal that you see in the next 1 or 2 years?
There are plenty. Immediately, I can see that at least 3 jobs or 4 jobs we have submitted. We are waiting for the opening. And each underground metro job size of around 2,000 crore plus. And thereafter, there are a few jobs in pipeline. So I think around 16,000 crore job opportunities are there in this year. And we have to bid for that. How much we get, we don't get, that is different issue.
All right. Thank you so much and all the best.
Thank you. We will take our last question from the line of Sunil Bhojwani from Venki Investments. Please go ahead.
Good afternoon, sirs. Congratulations for the great set of numbers. Can I know what is the order bid pipeline currently? What's the amount?
Bid pipeline, some we have submitted, some we are working, some we are yet to start. Put together will be around 25,000 crores plus.
Okay. So you have given a guidance of about 9,000 crores of order inflow for this year, which approximately means that our success ratio is close to 30 to 35%. Is that the correct understanding?
Actually, 25,000 crore order, pipeline is we have to submit our bid. But there are some already have submitted before. So 35% success rate is quite high. I think it will be around 20-25%. Basically, it doesn't depend upon the amount. It depends upon the number. If you are successful to get 20% success, the 20% value may be 30%, if you have the big ticket jobs. So that calculation has been changed a little bit now.
So what is the submitted bid amount, sir?
Submitted bid amount will be...
Just a
okay, if you say there are 2 figures. One figure will be around close to 20,000 crore. Another figure will be around 8,000 crore. Because the 12,000 crore figure there is a grey area, whether this project will take place immediately or not.
Okay. But we have submitted our bids for these projects. So collectively it is 28,000 where we have collectively bid for the projects, but 20,000 is the timeline cannot be predicted, right? Is that the correct understanding?
30,000, 25,000, 30,000 is the opportunity. We have submitted around close to 20,000. Out of the 12,000 crore, we are not sure when and how this project will take off. So it will happen sometime, but we don't know about the timeline.
Okay. So if 25,000 is the bid that we have 20,000 is the bid we have submitted out of the 30,000 opportunity, right, sir?
Yes.
Okay. So the other 10,000 also we plan to submit a bid sooner or later?
Yes, work is going on, and some of them are related to elections. So maybe another 3-4 months time we'll be able to submit.
Okay. And out of this order pipeline, you said that domestic and international would be about 50-50, right?
That is in particular segment, that is marine.
Only in marine. Okay. Otherwise, what would be the breakup of domestic and international in this bids?
Otherwise, domestic is predominantly domestic. There is some job in overseas which is not marrying, but that is not much. I don't want to quantify now. I don't have the figure now, but that is less.
No, I'm just trying to understand, sir, if we kind of submit say by next quarter, we are ready with the 30,000 crore opportunity, and with a success rate of 20-25%, we are still left with 7,000-8,000 crore new order inflow. And we are kind of going to realize about 9,500 crores of revenue.
Yeah, I'll tell you one thing. See, 30,000 crore, 20% success, this doesn't work nowadays. In one job, if we get 8,000 crore, only one job. So it has to go by the number. I mean, how many tenders we have submitted, and how much of them we may expect to get, and what is the value of that job. So sometimes Marine has seen 35% success rate.
So can I say that you are being a little conservative right now since it's the beginning of the year for the order inflow, and maybe you would revise the guidance going ahead? Is that the correct way to look at it?
So probably this time I'm not conservative. I think whatever number I have said, that is the upper limit, around 9,000 crores, yes.
Okay. So you think that is the upper limit, and crossing that would be a bonus?
Yes.
Okay. And you maintain by the 20% growth guidance?
Yes.
Okay. Fair enough, sir. That would be all. Thank you so much.
Thank you.
Thank you very much. Ladies and gentlemen, we will take this as the last question for the day. I would now like to hand the conference over to the management for the closing comments.
Thank you so much for joining us for this Q4 FY24 earnings call. We appreciate your support and interest in the performance of our company. We look forward to interacting with you again next quarter. Thank you.
Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.